Hello and welcome to the Pharma Forum podcast. I'm your host, Jonah Comstock. As I record this, it's been just about exactly a month since the JP Morgan conference in San Francisco. When you hear this, it'll be more like 2 months. But it's a good time to assess some of the vibes and predictions there about the 2024 deal-making and M&A environment. So to help me do that, I've got Cody Powers, Principal of Portfolio and Business Development at ZS Associates. And we're going to talk a little bit about the pharma M&A landscape. Welcome to the show, Cody.
Hi, Jonah. Thanks for having me.
So first of all, tell me a little bit about yourself and the work you do at ZS.
I lead our portfolio and business development practice at ZS. So the two sides of the equation, the portfolio side, what companies plan to invest in. So that could be therapeutic categories, technology, both internal and external to the company. And then second, the BD front. So that could be on the buy side or sell side, both the upstream strategy component and then the downstream diligence, screening, and integration. I think in terms of the types of customers we serve, we serve large pharma, mid-sized pharma, smaller pharma, development stage pharma, as well as the financial sponsors, so private equity, hedge funds, and so forth.
And you were in San Francisco last month too, right? Getting the lay of the land a little bit.
Yeah, the conference is a great way to kick off the year every year. Obviously, there's a great opportunity just to connect with a lot of folks from across the industry, just given the bolus of people who are there and kind of kickstart your year on what trends people are thinking of front and center.
So we had kind of a bevy of deals before the conference. There were two or three in December that kind of got us thinking, oh, wow, maybe this is going to be a little more of an exciting JPM than we expected. And then at the conference, there were several more announced. But mostly, with a few exceptions, they were sort of 1 to 2 billion, sub 1 billion. So not huge deals. But it did still seem to really create a very positive vibe in terms of, wow, maybe deal making is kind of coming back this year. So what's your take on all that? Like, what did you see in the deals that were announced, and what do you kind of think they portend? And has your take changed at all in the last month?
Yeah, if you kind of play out year over year, usually the deals that gather the greatest headlines, deals that are 30, 40 billion, you in a good year, you have two of them. So they tend to be relatively infrequent. And because they're so visible, even if they are infrequent, people tend to correlate the overall deal-making environment with whether or not one of those has been recently announced. But in truth, if you look at years that I think people would call hallmark years in the industry, so for example, like 2014, 2015 period was a significant spike. Just as much a part of the story are the $1 to $2 to $3 billion deals that are much more of the majority of deal making, from at least in terms of things that get press coverage. So I think in terms of the last couple of months, kind of correlating with the overall bull market run that's happened in the biopharma sector, that there's been a large increase versus, say, the prior 6 months in the number of, say, sub $5 billion deals. Certainly some more attention-grabbing headline ones that we can talk about that are above that mark. But I think over the last month or two, there's been a steady diet of these $1 to $2 billion and under deals that are much more consistent predictors of overall M&A environment.
So what are the headwinds leading up to this? I heard a few things. I can certainly give you my take, but I'd love to get yours fresh. And then you probably read my column anyway. So
yeah, this is kind of the ultimate combination of clear underlying economic forces, but also overall market psychology, essentially bearing out a result that people inherently feel already. And so therefore, like, perception is reality. That's maybe a complicated way of expressing it. So over the last couple of years, as people were very much in batten down the hatches mode, as funding started to dry up, starting at both private capital and then eventually in the IPO and SEO market as well, that kind of spilled over into the M&A arena. If people are trying to manage their own house, usually M&A activity is not really at the top of the agenda. But now that we've been through a couple of years, and it's not like any of the particular pipeline or IRA or fill in the blank revenue drop challenges that essentially any large cap pharma is trying to mitigate against right now, that eventually the forces at play shift, and that they shift back to buying again to offset potential revenue loss or any potential portfolio gaps or pipeline holes. I think that's what's been playing out the last few months, that a lot of these gaps that people have kind of known are coming, they've eventually just gotten to a point where they feel like they have to act, even though the prior 2 years they were probably aware of that. They just didn't feel like they had the ability to act at the time.
Yeah, so there's almost a little bit of kind of pent up demand and just as much supply in terms of companies that are available here for or on the market. I guess any company is on the market for the right price, but and I hear this term dry powder too. Like the pharma companies have been, they have been either saving up or or they've just had good years. They've got the money to invest in some of these deals.
Yeah, the dry powder concept obviously is important just for measuring the industry's propensity to go out and spend. I think it's just as important now for measuring, frankly, cross-industry a willingness of investors to continue investing. It's not usually been the case that most of the life science and healthcare world has had to make an argument for continued investment vis-a-vis other sectors, just based on growth of the last, say, 2 decades. But when the Nasdaq Biotech Index kind of consistently goes down for 2 years, you have to start making that argument. So, in fact, if you kind of look at that split between large cap and development stage companies, it's even more pronounced, right? A lot of the development stage companies have been harder hit. So, if you look at it from that perspective, a lot of the capital that people are redeploying, there's a sense of angst of, if I don't start using it and start generating the returns, then there's a degree of impatience either at the individual company level, certainly at the sector level. And that if there are other industries where the returns even look comparable, then the money, it's no longer a question of money that's been walled off to just, say, the life sciences or biopharma sector, but also money that could just as easily move into the tech sector or media, et cetera.
Yeah, that's a good point, and maybe a slightly obvious point to make, but a good one is that deal making does not happen in a vacuum. It affects all the other aspects of this kind of market, including willingness to invest, right? If more exits are happening, then investors want to get more money in because it's an opportunity there. Whereas if fewer exits are happening, investors might sort of be more cautious or more stingy, right?
Yeah, and no better, I think, sign of that than even just the IPO window. If you look at private capital rounds, obviously it's been challenging over the last couple of years. And in fact, the aggregate trend has been rich get richer, if you will. So there are fewer deals, but the average per deal has gone up. So just in terms of how even the money flows into that arena is material, because it essentially decides how many IPOs we're going to get, even when things, quote unquote, turn around. So if you look now, we're finally starting to see evidence of people dipping their toes back into the IPO water. I think that was a major outcome of JP Morgan, a couple of companies essentially coming forward with potential Q1 IPOs. So I think that's probably even a bigger reason for optimism, frankly, in my mind, more than even the M&A sector, just because IPOs are essentially a lot of the fuel for the industry, right? The financing that essentially makes more targets available late stage has to start somewhere. And the IPOs are often the biggest source of that for some of the headline companies, at least, that people pay closest attention to.
What were some notable IPOs that we heard about at the show, or potential IPOs?
Yeah, I don't want to speculate on individual companies per se, but what I can say, if you look at the ones that are announcing, one, you have a couple of different camps. One, you have ones that are in traditional blue blood spaces that people will always have interest in. So particular oncology therapeutics that have novel mechanisms will always be of interest. I think one that I'm very interested to see more of, or whether or not there would be more of, companies pivoting very quickly on the basis of two major trends: ADC deals and, frankly, GLP-1 deals. I mean, I think right now, if you're in those spaces, now is kind of the time to strike. So I think I'm curious the extent to which people maybe they don't feel like the market is totally healed, quote unquote, but that maybe there are a couple of companies who end up making the push if they're in one of those arenas that obviously gets a tremendous amount of press now, just because they know their window could be not forever. They may have a very finite period of time here to capitalize on the market.
Yeah, I mean, that's a risky situation to be in, right? Because the spaces that are getting a lot of buzz and a lot of press are also probably the spaces where there'll be a lot of competition, right? I mean, I think GLP-1 is a good example of a huge potential, but like not everyone is going to succeed there, right?
Yeah, I think on the GLP-1 side, one thing that's important to keep in mind, the underlying science, we're only at the beginning of the discovery. One, even in its applications to where it is currently used in diabetes, obesity, broader cardiometabolic. We just had, for example, MASH data from Lilly read out this week. But I think the other half of it, and why I think the space is so interesting, is that that same mechanism has the deep underpinnings in other parts of science. Has a tremendous amount of, for example, psych use potentially. So you've heard some of the players in the space right now talking about its applications in depression and so forth. You have people talking about it for smoking cessation and alcoholism, and maybe those spaces right now people view them as dormant, as they've been for many years now. But once upon a time, obesity was also a dormant space, So I think that's part of the lottery ticket effect. I think that a lot of people have almost bought into in GLP-1 that it's not even clear if we really have the optimal mechanisms fully identified yet, even amongst diabetes and obesity. Obviously, you've heard, for example, Amgen talking about muscle preservation being their key goal rather than just weight loss. But that I think that if it explodes in Alzheimer's or something else, that people want the ability to kind of diverge from the pack and not do the same indication sequence.
So let's back up a little bit and talk about this from an indications standpoint. Talking about the M&A as well as the IPOs. What are kind of from where you're sitting? What are the hot areas? What are the areas we should be looking closely at? And do you think there's any that are maybe a little overblown or a little played out?
There is always a kind of a lens of would a company look at the particular investment as, I think it's so big that I can't miss, and that they would rather buy essentially an insurance policy, and that if something does explode, that they have an option versus that they're just out left in the cold. And in that situation, oftentimes what can happen is that you end up with a market that's so crowded that it becomes very, very difficult to differentiate. So even if you take like the ADC pipeline or GLP-1 pipeline, for example, I think everybody who is investing in that pipeline knows that the race effect is such that even in the ADC world, there probably isn't space for everybody if everybody were successful. So there is essentially a need to differentiate. 52 ADC deals last year, something like that, just on the basis of how crowded that market can become. What you've started to see now in the ADC market is it's a little bit different than maybe the PD-1 race. In the PD-1 race, you had a couple of tumor types, for example, that everybody rushed into as like, this is going to be the big market. And then you had certain ones that related to market where just effectively you got squeezed out because the people who were first essentially became dominant players. Versus, I think, a lot of the ADC market now, you see people learning maybe from that PD-1 experience. You see it much more carefully sliced up, if you will, into smaller pieces where people are trying to find their particular pocket to play in, as opposed to trying to be everything to everyone or go after the same spaces as everybody else, just by virtue of they don't want to get in a situation where they're maybe akin to the PD-1 situation, squeezed out by being fourth or fifth to the game.
Interesting. I'm just looking at the time. Let's talk about some particular deals. You mentioned earlier, there's a smattering of a few billion, sub-billion deals, and that's a really good indicator of kind of what's going to happen. But there also have been a few bigger ones that might be worth discussing on their own. So what do you see, of the last kind of, this year so far and the very end of last year are the big deals, the bigger deals, and what do those kind of have to tell us about what we can expect this year, if anything?
I think maybe if I had to pick out a couple of areas together, one overarching trend is somewhat like what is old is new. So I'm going to pick out three particular areas. So I mentioned ADCs and obesity before. One I'd add there is the psych space. The Karuna and the Cerevel deals back to back was, I think, pretty momentous because these are it's not like these companies didn't have adequate following or press beforehand. There's certainly a lot of people who've been following them for a while. But if you look at the development and frankly revenue trajectory in those particular diseases that those companies are focused on, it's been flat for a long time. So in terms of the underlying growth here that essentially you would portend with those particular spaces, that now you have a lot more companies who are interested in vying for these. Maybe in the AbbVie case, obviously they already have presence in that arena. They would know it well. But in BMS's case, obviously they exited the space a long time ago and now are coming back in. So I think from that standpoint, you could see that more and more companies are probably willing to reevaluate their priors and decide, okay, well, maybe we made a decision at one point in time to exit. Should we come back in? Just the same way that, frankly, a lot of companies probably made a decision about ADCs a long time ago, just the same way that many companies made decisions to exit obesity a long time ago and are coming back, that you see actually a lot of this deal activity of companies who are willing to come back to spaces. I think looking forward, I would expect to see a lot more of that in the CV metabolic space. Obviously, there was a number of years where people basically just associated a lot of CV disease as a post-LOE cliff. But now, through advances in technology, companies like Alnylam, for example, that have made tremendous growth in the space, that people have found that technology essentially has reinvented the space in some ways, and that I think more and more people would probably be revisiting that assumption again.
Let's talk about one elephant in the room, the FTC. We're talking about big deals and sort of an excitement about big deals, but at the same time, there's more scrutiny than ever on pharma deal making, especially larger deals that we saw last year with CGen and stuff like that. So what's how are people thinking about that, and is that causing any hesitancy around doing these deals?
Yeah, I think people pay closest attention to the big ones. So, for example, the Horizon deal, people paid very close attention to that. That one, the FTC was fairly direct and vocal in their demands on both sides. I think the one that probably is, in my opinion, even more symbolic of the shift in FTC position was the recent Sanofi collaboration that they essentially declared as anti-competitive. So for those not familiar, Sanofi had a partnership in Pompe disease. The FTC essentially intervened and said that you would have too strong control on Pompe disease, including their inline pipeline or their other assets already in development. And so they were essentially forced to break up the partnership. So I think that one is probably even more meaningful, because in the M&A situation, you could imagine that a lot of the argument depends on control. If I can control everything, then in theory, so the FTC case goes, you can stretch price, you basically don't offer as many options. And that's all the stuff that Lena Khan and the current regime essentially have been arguing, and not just in life sciences, but across industries. In the case of the Sanofi collaboration, it's a co-development relationship. These are not merged companies. They're development partners, potentially commercialization partners, but they're not the same company yet. So the FTC intervening, even in the case of, say, two companies collaborating, does pose, I think, bigger challenges for the industry, because particularly in a lot of these rare disease arenas, usually if you're trying to pick out particular rare diseases, there aren't a tremendous number of companies who are investing in every single rare disease, right? We're starting to get more and more spaces where you have multiple companies or entrants. If you looked at the broader rare disease spectrum, you might have a couple of companies that are focused on a particular rare disease. And generally speaking, those development partners tend to play with the same set of dance partners. So if in fact the FTC did continue to go after those kind of co-development relationships, that could pose just as much of a challenge, in my opinion, just if not a bigger challenge, versus some of these large headline M&A deals that obviously get the lion's share of FTC attention.
That's an interesting distinction. I mean, are there indications that's likely, that's on their radar?
I think ultimately this is like everything else this year. It does really come down to the politics and who wins out. For a lot of the FTC mandate, or at least what they see as their mandate, and the things that they're attempting to change now, they need runway. So if there's a change in presidential power, then presumably it's going to flip. I don't know if they would stay on. So if that is the case, then you can imagine maybe this year they're trying to obviously legislate their position as much as possible. But going beyond that would really be dependent on the presidential election.
Interesting. I've got one more for you, and then I want to kind of ask you if you have any thoughts that we haven't touched on. But we talked a little bit about indications. The other thing I heard a lot at JPM was about kind of the stage of the company. There's a lot of interest in kind of late preclinical or clinical stuff that's a little more de-risked and a little more likely to sort of, not be too much of a bet, but more like this is actually going to bolster our pipeline. Is that your sense too? What would be kind of your your advice or your perspective for a company that's a little earlier stage and maybe looking for either investment or an exit?
Yeah, if you look at it from the buy side, when you're buying late stage, statistically, you're usually making a trade-off. You're trading off the certainty, you're trading off the immediacy in exchange for typically a long run ROI. We do a lot of work analyzing the ROI of deals. And if you look at the broader spectrum over the last 15, 20 years, generally speaking, early stage deals for a buyer, at least amongst mid to large cap pharma, pretty consistently out earn late stage deal ROI. Once upon a time, that was not true. So if you went back 20 years, there are ways to pretty consistently earn out strong ROI from late stage deals. But at this point, it's kind of all priced in. The market has gotten more competitive for these deals, and it's driven not only the price up of the companies themselves, but the premiums that are stacked on top. So from that standpoint, going back to your question there, if you're a company who's earlier stage, if you're a company that's preclinical, if you're a company that's phase one, that a lot of the value that a buyer finds in you is you're trying to exploit information asymmetries in the market. Right? If they discover you before anybody else does, that you become a potentially attractive investment because you're essentially promising upside. So I think for a lot of these cases where you're being asked, look, I need to see more clinical data. Yes, of course, that everybody gets exactly what they want and they can make those trades. But just the same way that they're looking for clinical data, so are their competitors who are also potentially looking at you or are interested in you. So you're basically trying to find the ways to make the most promising science available to them and in ways that they believe in the upside argument, and try to plant the seeds of, post proof of concept, this is why we feel strongly about a result, and essentially building up your leverage via the other companies, obviously, that you may be engaging with. I think that's essentially the way to both line up your interests, where you're trying to rack up more investment, more funding sooner, and their interest, which is probably getting out ahead of their competitors who would also be competing for your asset or for your company's services post POC, post readout in phase 2, whatever the next milestone is.
Yeah, I mean, I know that there are various ways that through kind of, partnerships, companies will try to get themselves, big pharmas will try to get themselves positioned to be the one to make that buy when that readout happens or when that good data comes in. But I mean, is that do we see kind of opportunistic buys off the back of a exceptionally good sort of phase 2 readout or something? Is that how that plays out?
Yeah, anytime that there's a readout, say day 0, and there's a buy 3 days later, they obviously they've been having conversations up to that point or prior to the announcement as part of the process. If data has not been released publicly, then typically the company has no right to access it, so they have to wait. But usually in those situations, if a company has basically decided, look, this is a good target, we're interested, we think the science is strong, we think the program is promising, we just want to be a little bit more sure. But usually they are kind of accepting that they're probably going to have to pay a little bit of a premium, but that they want to essentially, instead of winning on price, they want to win on cutting off competition. They want to essentially get a bid in very quickly after that event. So that is a strategy all by itself. There's some companies who essentially make a handsome living off of that strategy, who are ones who are typically very active immediately post ASCO or ASH, or pick your favorite academic conference. But in that situation, the principle I mentioned before, that the conversation started well before that, those years, for all intents and purposes, but that they've got all their ducks lined up in a row and they're just waiting for the exact moment when the data drops.
So any other kind of pieces of the puzzle that we haven't discussed yet that you think is important as we think about this year to come, or particular areas that are interesting to you for whatever reason?
Yeah, I think the biggest one that I'm personally paying attention to, that you started to see relatively consistent talk about from the podium, some of the IRA impact that hasn't quite been fully felt in the deal making environment. Last year was the announcement of the first 10 assets. I'm using assets in quotes because it was some of them are multiple things underneath the same active ingredient, but just call them 10 assets for now that will be negotiated against by the government. If you look at the overall deal-making environment, when IRA was announced, number one. Number two, when they announced those 10, even if there were temporary setbacks, they were quickly more than made up at least if you look at just global equity indices. So now playing it forward, you're trying to find like what is the event when it would start to reverberate backwards and affect the deal making environment. So, for example, what is the time in which you would see fewer small molecule deals, or small molecule deals go for smaller than they would have been before? Or what are situations when there are particular investments that are predominantly Medicare populations? Would you start to see more material investment impact then? At least according to the data that we look at, we can't really pick out obvious trends where these types of transactions or investments have faced any kind of major headwinds versus what the alternative would be. But I think I am kind of paying attention to what is that event where, for example, when they announce that they've essentially completed negotiation that of the first 10, that people would essentially start to bake it in more actively and alter the choice. And that's not just starting with large cap pharma or mid cap pharma who may be making these investments and for whom the money kind of trickles down through the system. That's, I think, just as much a question starting at the bottom, if you will, with venture capital. A lot of venture capital today is chosen to kind of ride it out and watch what happens and just believe that promising science will always win the day. When would be the moment when, because essentially the Pac-Man effect, the people who are eating further up the chain, that when they decide that they're not willing to invest in something, that effect essentially reverberates all the way down the line, down to the earliest stages of seed funding and so forth.
Do you think it's safe to say that the economic impact of the IRA drug price negotiation provisions, as it was sort of being talked about one JPM ago, 2023, was overblown? Or do you think it's more a matter of that the industry sort of is accepting and adapting and figuring out how to work around it? I have this sense that maybe some of the rhetoric we were hearing in 22 was some of the sky is falling rhetoric was more about sort of, messaging. And, we want the public to know how upset we are about this because we're still hoping we can get it changed or repealed. But it doesn't feel like those kind of doomsday predictions are coming true.
Not yet, because they haven't negotiated anything. So, yeah, I think to your point, maybe it's still in the offing. I think it would be hard to say that the politics of the moment and that the judicial system in play or judicial cases in play don't play into some of the public communication. I mean, that's a pretty fair assumption. But if you actually look at the economics, the reasons why it challenges some of pharma's fundamental structure. Number one, if prices are growing faster than inflation, then you can't do that anymore. So essentially, if any drug is materially affected on the price rebate, so that does change strategy. But number two, I think particularly in the small molecule situation, if you look at when drugs really generate profits for shareholders, most of the profitability is on the back end. So anything that affects the back end materially affects the outcome. So as an example, on average, you make about half your revenue years 0 through 9. You make about the other half of your revenue, say years 10 to 14. You typically have 14 years to LOE. So if the government negotiates your small molecule program at year 9, they take off half, then it's a pretty big deal in terms of the overall profitability picture. If they take off half the revenue, it's not like your COGS went down. So in terms of the overall aggregate profitability picture, they obviously would have stripped out quite a bit.
And it'd take years before you actually see that impact. I mean, obviously you see the reverberations of it in how people are prioritizing and planning, but it would take a long time to actually say, here's what the actual impact of that on pharma revenues was, because it's all about the long tail.
Exactly. And so presumably in terms of the real bite, look at the first assets that are negotiated down, but the go live date is still a couple of years away. You may not really see material earnings impact for 4 or 5 years before it becomes very obvious to everyone. So I think at this point, people are making proactive assumptions based on the bill itself, but also on likelihood of changes, likelihood of judicial outcomes changing the matter. I know there's a bill going around now that I know at least one Democratic House member has signed on to try to move the small molecule provision from 9 to 13. So at this point, there's still probably too much in the air for people to fully bake it in. But at least now, because we have the first 10 announced and there's more happening near term, I think more people are probably starting to take active decisions rather than wait for the system to decide for them.
Yeah, that makes sense. That's interesting. I hadn't heard about that bill. I could see that a change on that level being something that gets through. Of course, trying to predict this Congress is probably more foolhardy than trying to predict.
Yeah, do it at your own peril. I agree.
Yeah. Well, thank you so much for joining me, Cody. This has been really fun. And, this is an area, obviously, of great interest to everyone, but one that not everyone has expertise in. So I really appreciate you kind of sharing some of your broad impressions. And I think it's a fantastic perspective.
No, great speaking with you, and thank you for having me.
That concludes this episode of the Pharma Forum podcast. You can find more information about this episode, including a download link and information about other installments in the series at pharmaforum.com/podcast. The Pharma Forum podcast is also available on iTunes, Spotify, Acast, Stitcher, and PodMe, where you can find and subscribe by searching for Pharma Forum. And don't forget to visit our website, where you can sign up for daily news and analysis bulletins, and to follow us on Twitter at Pharma Forum. Thanks for listening.